Let's go to Peter McGuire, CEO of XM Australia. Peter, the big news overnight really must be the Fed's sort of final strong signal that indeed cuts are on the way. The sort of labor data coming out of the US looked relatively weak.
Yes, absolutely. Well, the data is weak, and that I think that's going to be a strong point as far as Fed Chair Powell. You've got about a 75% probability now baked in rate cut in September. And how many rate cuts will you see over the rest of the year? You've got a composition of around about 20 in a recent number I saw, or a graph I saw, with the 5 different probabilities from 21 investment banks and banks and financial institutions globally, starting from 0 to 25, 50, 75, and even 100 basis points. Everyone has an opinion, and the context of the view is very much, I think, 75% looking at that probability of a rate cut in September. You'll have election interference if you were looking to do something in October. You might see something in December if they're allowed to cut again, or November after the election. So it's going to be a tough one to see what they can do, or do they do something larger than what everyone's anticipating and look at 50 basis points. You've got softness as far as NFP. You've got PMIs as now starting to be, I'll notice the services under 50, Sean, they reported about 48 odd. So that softness in the market is going to be impacted. One still thinks that, you've got core inflation down, but you still can't get your mind away from the big uptick as far as gasoline prices, airfares, electricity, groceries are really impacting the consumer in the US. And then you've got a very, very strong US equities market, which we see earnings come out and start on the 12th of July, which I think everyone's strapping themselves in. Are we going to see a continuation of upside lift for this rest of this quarter, which I don't think we'll be surprised if we do. It's a fear of missing out rally.
Peter, these are all fairly substantial floorboards in this $80+ oil price going into the second half. What's the China demand part? That's obviously another big floorboard in this oil price. China has underwhelmed to a great extent in the first half of this year. Can we expect it to sort of get stronger in the second half, or more of the same? Your thoughts for the outlook for Asian demand, crude in particular, in the second half?
Well, Sean, I think first off, if you look at where the Chinese economy is, and if you're looking as far as the equity markets, and that's a good gauge to tell you where everything is, you've got the CSI 300 sitting just under 3,500, or it's 34 and a half. So that's really structural weakness if you're looking at the equity markets. We understand that, and the storyline hasn't changed as far as the property sector, 90 million, that story, 90 million uninhabited apartments, someone's holding the debt, and that's international and domestic banks. Then you're looking at a weak consumption from external as far as buying those exported goods from China. And there is certainly a softness across consumption because everyone's maxed out as far as credit card debt and inflation. And that's pretty much globally. So those cheap offerings that Chinese has as far as sales, they're not knocking the ball out of the park. So they're looking at domestic demand, and that seems to be also quite soft. And then you're looking as far as consumption with energy. Well, their energy market hasn't really gone down. You've got quite hot weather there at the moment. You've got the other side, of course, is domestic demand for driving and mobility and all of that. So I'm expecting their demand from oil and for energy to be relatively strong over the rest of this quarter and probably leading into the end of the year. But I don't see any turnaround quickly from the fabric of Asia as a whole, or Europe, or the US and Americas, to go out on a buying spree and buy all these finished goods. They don't have the capacity financially. And you're feeling that on the street. That's the sort of vibe that you pick up when you travel through. Everyone's first line is the cost of living and the impact that is, regardless of where you sit on the planet.
Peter, I wanted, before we finish up today, get your thoughts on all things Japan. Of course, a very big economy in Asia, and now with the yen going above 160, is this just an endless rock dropping through water? At any point does the yen reverse? What does it tell us about Japan's outlook, that they're sort of not intervening, or they're failing in their interventions?
Well, Sean, I remember the art of, the Japanese. They're going to play it very much like Sun Tzu. They're not going to give you warning. They hit the market a couple of months ago with a 60 billion purchase of yen, which in turn, that's US dollars, which in turn created the yen to rocket down from 160 back to away at 154. You're nearly at 162 at the moment. From a trading perspective, I think the red lights are flashing to traders. This news can come at any time of any day. I really thought that they'd do something last Friday, being end of week, end of month, end of quarter, and end of first half, and for some countries, end of financial year. But that wasn't the case. So maybe they're going to do it on Independence Day, Sean. Who knows? So there's the start. So I think that they will intervene at some point in time. I think you'll see a 10 basis point rise to the upside as far as rates in July from the Bank of Japan. And you can't take your eye off the ball as far as Nikkei 225 crashed through 40,000. It's still around that 38, 39 sort of handle at the moment. And there's still plenty of upside, I think, in the Japanese stock market in the short term over this summer. So maybe it's on the back of NASDAQ. It's going to ride higher. And, is the real worry the yen, or is the real worry the price of this stock market?
Looking at the Japanese equities as some kind of bellwether to the wider health of the macro picture, what does it tell us about Japan? All of its exports are dirt cheap, so they're going to make lots of profit? Or is the yen a safe haven because the dollar is looking toxic now that there's so much debt in the US? What does these 40,000 on the Nikkei tell us about the wider macro?
I think it tells us both, because it's quite simple. You're nearly at that every day. You're crunching high to a record high as far as Nikkei. You're sitting now at around about that 40, nearly at 41,000. So it's had a dramatic move up in the last 5 or 6 months. As far as the price of the yen, look, it all impacts as far as exports. It's going to make it cheaper. So in turn, that really they're competing against the basket of Asia for finished goods. We understand that they're a technocrat style of country similar to Germany, in the sense that their finished goods are world class, if not the class that everyone wants to get to. So you can't argue with their finished product. And from a domestic demand perspective, it's got strong consumption. As far as flatlining or declining population growth. But the other side of it is you've got relatively strong economics internally. So I don't think Japan's in really that bad a spot. They're feeling inflation like us all in Asia, but that's just the price of the world at the moment.
Peter McGuire, CEO of XM Australia, great to have you. Ali Al-Riyami in Oman, wonderful to have you. And Adi Imsirovic, Director of Surrey Clean Energy in the UK. This is our last episode together as we wind down this season for the summer break. Thank you, guys. You're always awesome. 3 of you together, best in class. Really great. Thank you. Have a great summer. We'll see you all in September. All the best. Thank you very much.